registering for GST as a dentist graduate, as a contractor, yes, you need to register if you're going to be earning over $75,000 worth of income, and generally coming out you will exceed that amount of money. Another benefit there is that most of the supplies and the structuring arrangements that dental contractors have is that the supplies you are doing or giving your services are GST free, but the expenses you're going to have, such as a service fee where you're paying fees back to your boss, costs such as your ADA subscriptions, motor vehicle and potentially dental supplies will have GST on them. So being registered for GST allows you to claim the GST component back as a refund, even though you might not be charging any GST on your services. Most dental graduates will register the BAS on a quarterly basis and register for cash. Essentially, it makes it much easier for them from a paperwork and administration point of view, because if you're registering for your BAS on a monthly basis, you've got to do 12 BASs as opposed to 4 quarterly, and the ATO actually will fine you if you lodge one of your BASs late, even if you are getting a refund. So that tends to be the more popular way to go. In relation to records, what do I keep? Essentially, your employer or boss will give you a payment slip where they go through and look at your fees earned less the service fees. That would come through either month, weekly or fortnightly. You need to keep all of those. And any expenses that you go through and incur, keep the receipts. It's better to keep the documentation and then go through and make a summary rather than have no documentation and you're missing out on claims. The use of a company doesn't give you any asset protection increasing because of claims coming from a medical perspective. It does, however, add to your accounting fees and it does add to your overall compliance costs. Most of the dentists that we're setting up now are simply sole traders with an ABN. Much simpler structure, no downside for tax, no downside for asset protection. If you're a specialist starting out, many people think they need to set up what's called a service trust. A service trust is an entity which originally was set up for asset protection purposes. It holds the plant and equipment of the practice, such as your fit out, any medical equipment. It also employs staff and holds the leases. It will then operate as its own little independent business. You could equate it very much to the type of business that maybe a serviced office would provide. It provides the practicing doctor with administrative services that allow him or her to operate their medical practice and pay a fee to the service entity to provide those administrative services. Depending on whether or not you're setting up a practice where you're working for someone else, so sometimes doctors, when they're coming out, they'll already be paying a percentage of their fees off to another operator or doctor who's already got the rooms, is whether or not you can set up a service entity. You need to look at your overall commerciality aspects of your arrangements, so anyone that's interested should contact me and I can talk to them more about it. When considering a service trust and what a doctor should pay for, the doctor, it's very easy to think about. It would be all the expenses that you would already be paying for if you're not in business. So these costs would include your medical indemnity, normally your motor vehicle, your subscriptions, being any college fees, any AMA subscriptions, any subscriptions to professional journals, any conferences, seminars or courses that you go on to, and any travel associated with that. On top of that, you could also look to be claiming some sort of home office expenses, mobile phone and internet. The service trust, if you're operating one of those, would normally employ any staff, including nurses and receptionists. It would also include your practice manager. It'd have your rent, any leases of equipment, any depreciation on equipment, printing and stationery, postage, any costs associated with operating the business. So you've been in practice for a little while now and your boss has come up to you and is looking for a bit of an exit strategy and has asked you to buy into your dental practice. The opportunity is there and it's much easier generally to be able to buy into, and a lot less risky, buying into an established dental practice than setting up one yourself. With a lot of graduates coming onto the market and a lot of new practices opening up, the more and more they open up, the more the market will get saturated. So being able to get into established practice is a good idea. However, the big thing you've got to consider is whether or not the practice you're buying into is overall commercially viable. Always come back to that when you're making any investment decisions. Look at the state of the equipment, the term of the lease for the premises. look at what arrangement your boss is looking for, and most importantly, above all else, what are they looking for you to pay to get in on the practice. So going through, part of the steps would be examine the practice, get a valuation done on the practice, then go through and talk to your boss about what sort of financial arrangements they're looking for from you in the future. Again, we've got a lot of experience in this area and happy to talk to anyone that's got any questions or is lucky enough to find themselves in that situation. If you're looking to buy into a practice, you're going to be faced with a lot of ideas on what sort of structure to buy in. Again, depending on where you are and your opportunities coming to you, there's a multitude of structures that can use. In many situations, you'll be using what's called a discretionary trust to purchase your interest into another business. Or potentially you could buy it in your own name, and there may even be some company structures that are useful. In some limited circumstances, some people even use self-managed superannuation funds to buy into a practice structure. So again, you need to examine your own personal circumstances. Another aspect to consider when you're buying into a practice is the finance. You've got there's a lot of banks that we're wanting to deal with you at this point in time. The main ones that we normally find are going to be Investec, NAB Health, which is also Medfin, Westpac and Suncorp. Have all got very strong lending and support facilities in place for medical practitioners. So if you're looking at going through and buying into a practice, look at who's going to give you the best deal. Don't just go with somebody that you may have gotten your home loan with or you've been using previously. Examine the market and make sure you're getting the best rate and the best deal. So again, the two methods of payment. The first method is, the easiest way to understand it is whether or not you're getting paid your amount, being your 40% plus GST, or your boss is charging you a service fee and including GST on that. Under one method, you're paying GST out, which is the locum model. Under the dentist in practice model, you're actually getting a GST refund coming back to you. Which one works best for you? From a cash flow point of view, the locum model would appear to work better because you're actually getting more money in your pocket each period. However, it does even itself out very quickly because under the locum model, you have to pay GST on your BAS. Under a dentist in practice model, you're actually getting a refund coming through. So you need to consider that. From a relation of taxation, the dentist in practice model does end up giving you a lot more flexibility as to what you can claim because you will be classified most likely as a professional services business. Opens up a few more tax deductions for you. So if I had a choice, I'd look at my dentist in practice model, the model where my boss is charging GST.